Hey, friends. Hope you are doing great today. So, in this video series, we will be discussing about five issues that comes in trading. So, the first one out of the five is over trading. So, I'll be discussing what overtrading is and how did I personally solve the problem of overtrading and how did it come about. Firstly, things like overtrading, we are totally different. I train myself I learn myself how to trade, I teach myself how to trade. So it's a process of self-grooming, trial and error. That's basically how I learn, how I grow to be an entrepreneur that I am right now. So it's about seeing what works and what doesn't, and keep trying with what works. So over trading to me is I for me to realize that I'm over trading is when by I trying to write in my journal and I'm seeing, okay, on my records there are some of the trades that I didn't record, and there are some of the trades that I didn't really have an explanation on how did I end up placing these kind of entries, how did I come up with them, and I really struggle to find out what really happened for me to have these entries, right? So in other ways, over trading is just having a lot of entries that you cannot explain or you cannot recognize as how did that happen and how did they come about. So first and foremost, one of the main major issues that I would say I was over trading was when I realized that, oh, okay, my setup goes like this, and I'm expecting to see this and that so that I will have an entry. So what are these and that, right? I come up with a solution to determine what kind of entries, quality entries, that I'll be looking forward in the markets, right? So for me to press a buy or sell button, I have to go through a process of 4 stages, right? The stage one, I call it evaluation stage. Evaluation stage is when I came to the markets and I do my assessment. Things like checking the daily likely highs and possible lows, mapping up weekly and monthly, probably that's the first thing before I get to draw up anything. So as I check on my higher time frames, weekly, monthly, I will have a sense of direction on a higher time frame. That will help me to be aware in terms of having to find some interesting areas in a higher time frame. Actually, markets really do. That's a tip for you, a free tip. Markets really do respect higher time frames, and there's less noise, and there's kind of clean chart. So after I do my evaluation, I map up what are likely or what am I looking forward to see in the markets, could be for this week and next week, or or could be what day of the week, or could be as well what week of which month, right? Which season are we in? Are we in winter? Those things actually do affect the markets. So the evaluation comes into a count of number of things, which time of the month, which time of the year are we, what is actually happening in this, what things are likely to repeat in these seasons. So seasonals and monthly, all those things has to be taken down seriously, right? But you can't evaluate all the time, right? So what will I be evaluating? Let's say every day. Every day I have to evaluate on my higher time frames, daily charts and weekly charts. Monthly, probably just evaluate one monthly on Monday, and then you'll be done with the monthly evaluation, right? So the evaluation stage is one of the important. It's very very important, but it really doesn't repeat throughout the week, right? Not all aspects of the evaluation have to be surveyed throughout the week. So once I map out my higher time frames structure, I get to go to the second stage, which, yeah. So just a quick briefing on evaluation. I'll be really looking at the weekly ranges, daily ranges, monthly range, things like time and price, evaluation in general. So basically, that is where we'll be discussing about the evaluation stage. So once the evaluation stage is taken place, so it doesn't matter how long you take the evaluation process. It's absolutely up to me. Sometimes I take an hour, sometimes I take 30 minutes, sometimes I take 15 minutes, sometimes I take even 5 minutes. It's according to how am I integrating my mind with the markets. It's according to how friendly is the season. That, yeah. So it really doesn't have to be a deep thing or a deep thought for you. It's something quick, something personal, but it's about what am I evaluating, right? Then after evaluation, I go to the second stage, which is activation. Okay, on activation, yeah, you can call it activation uh, stage. The next thing that I'm really interested on is to find out, right, what is the price still on the higher time frame. What is the price behavior towards my areas of interest, right? And is there sense of structure that is formulating? Now it's like, I'm giving market time. I'm really sitting down, checking the markets. Is the price really pushing towards my theory from the evaluation process? And taking a closer look onto what are the areas of interest, what is the behavior of the market currently. So if I have a closer look, right, did the market respected this area? Did it bounce back? Did it break some of the zones, some of the trend lines, some of the angles that I'm really looking forward to? So by passing this stage of activation, I have to come up with an anticipation, right? Now I'm really okay. The markets are pushing this way, which is kind of pretty, which is kind of good. this is probably what I really want, right? This is probably exactly what I'm looking forward to. Okay, so as the market start to give me a brief of my theory and the action, am I in harmony with the market? Then once I'm in harmony, then the next thing that I'm looking forward to, right, is, am I close, or am I, is the market really following up on my theory? Am I close to my theory? Am I close to my areas of interest? That is the next stage, that is called authorization. Authorization, in other words, is it simply means that the markets have given me a go ahead, right? There's a green light. It really respected, for example, my trend line. It really respected my area, or it really passed this stage. So they give me the authorization to say, yes, we are going to behave. We are going to respect the key levels. Yes, we are with you, right? So once I have the authorization passed on my side, right? Then that's when I have to put down things like, because I remember when I've given the authority by the markets to say, okay, yes, we are going to behave, we are going the way you think, right? It's working on my side, right? Now if so, as I'm on authorization stage, right, this is one of the most important stages for me to get into a trade. So yes, I get the authorization, the confirmation from the markets. They are respecting my key levels. I tend to map out and do my measurements. Start to map out. Okay, this is where my entry is going to be. This is where my stop loss is likely to be, and yeah, that's where I start to do my simulation, my mapping, and started to check with other. Let's say if you use any indicators, what are they saying? Are they are they corresponding to this stage of an entry that we are in? If yes, then now I'm busy writing down, right? If the markets are flowing, now I'm fully focused on the markets. I'm really sitting down and checking each and every move of the markets, right? Waiting for the price to go to a certain price that I'm really looking forward to enter. I'm mapping out. I'm doing my drawings. Yeah, that's the stage, and I'm mapping out my take profit, my target, my lot sizing calculation. Okay, if my stop loss is going to be here, I'm likely to use this lot size, right? I'm putting all those things in perspective. I'm mapping it out so that when I am on my final stage, which is the launch stage, now I'm launching, right? I really don't have to think again, because remember, I'm only entering when the price is at a certain range. If the price is at a certain range, I am going to only enter there, right? And if it passes there, then I missed the trade. That's absolutely true. So I have to admit that I am going likely to miss. So I have to avoid by all means to miss any trade. I have to be there sitting down. The launch stage now is to map out, right? Remember on my previous authorization stage, everything has been calculated. Now the price is reached the area or the zone that I want to enter the market. I'm interested to buy or to sell at this price range. Then now I'm launching. As I'm launching, this is my launch stage, there are two things that I have to cross check. Is my size, am I correct sizing my trades? Is my target really reasonable? And is my exit, if things goes well or bad, am I happy with the result, right? Before I press the buy or the sell. If those things are in place, the last thing is to place a buy or a sell. As I am buying or selling at this particular price, I make sure definitely immediately that my stop loss and my take profit are in place. The thing that I can sometimes, not all the time, sometimes adjust is my take profit. But here's how I do it. Let's say I'm entering right now. I have maybe I want to enter with a lot size of 0.1. I don't enter only one trade of 0.1. I have to break that trade down into two, right? So that I will have two exit targets if I am on a profitable side, but on my stop loss there's no negotiable there. So I break it into two, right? Which means I'm going to enter with two trades or two entries. The other one is 0.05, other one is 0.05, which adds up to 0.1, right? And the first one, probably I'll say I want a closest target, right? A reasonable target. And then I let the other one a little bit far. Why? To avoid things like, why did I exit the trade so quickly? I was probably supposed to stay a little bit longer. So the advantages of the most important advantage of doing this is, firstly, as I enter, if the market's probably the price is going in my favor, but slowly. I really don't want that anxiety. Should I close? Should I keep it going? I rather have a reasonable take profit one, so that when it hits the take profit one, right, at least I've banked something. I'm not in a position whereby should I close or should I not, right? But at the same time, I still have another one entry that is still running, and that is gonna keep on running as far as, not very far, but a little bit of a distance. That will help me not to end up entering again. So a setup, yes, it's on execution, and when entered, I'm not really expecting myself to execute a setup twice or three times, right? I have already eliminated the overtrading part of it. Remember, that's the goal. I am trying to eliminate overtrading. So after I've launched my trade, the only thing now that I have to wait for is the outcome. If the price goes against me, which is also fine, but I know how much I am losing. guys, there is absolutely no reason to enter a trade without a stop loss. There is zero reason, unless if you wanna give your account up to the markets. So stop loss, absolutely. Whatever percentage that works for you, it's up to you. I'm not here to tell you what percentage or what, but I'm here to explain the method that helped me to stop over trading. Right. So these stages is just a quick revision. This evaluation where I do the overall evaluation of the markets into higher time frames and goes to activation. Activation is whereby now the price is respecting my levels, right? Obviously I have to change time frames. I have to go a little bit lower. My favorite time frames that works well with my strategy, that okay, yeah, it's respecting this, it's respecting that. What's the price action? What is, what was the recent action? That it can be yesterday, it can be in the morning, it can be an hour ago. Okay, it respected this and this and this. That is evaluation. Then authorization. I am authorized by the way the price behaved into the areas of interest and where is likely to go. Then the final stage is the launch. Every stage is important. For every stage, there's work that needs to be done. For that work to be done, this is to also keep myself busy, right? Because sometimes the market can start to ramping around, hyper price movements and all that. Then you end up just, oh, let me just enter, or let me just press the button or something like that. So along these stages, there's work that needs to be done, calculations that need to be done, maps that have to be drawn, lines that needs to be put in place to avoid the markets to play around me, right? So as this is happening, I'm fully aware of my areas of interest where I am going to enter. That's basically it. That's how I conquered over trading. Because personally, I'll be like, what? Let's end up seeing, okay, how would you end up having three trades a day, or only two, or only three, or only 5 entries? If your target is 3 entries, or if your target is 5 entries a day, then let it be. And I hope this will help you, and I've tried my best to explain how I did it, and hopefully you get some helpful information from this video. And if you like the content in the way I'm putting it, please do like the video, please do share with the community, because I'm here to just help someone that believe they are entrepreneurs, they are coming up with something, they are really passionate with the markets. I'm not shy to help such individuals. That's basically why I'm here, and I'm giving the best that works for me, thinking hopefully it will also help you out, right, to avoid some of the mistakes that we make as human beings. Yeah, so please do subscribe, and wait and see the next coming edition of this series, where we'll be discussing about a clean setup, right? How to clean up your setup, how to have a clean confirmation, clean confluences for your strategy, or for your interest, right? Just to be as clean as possible. So that will be our next video. I hope to see you there. Thank you for your time, and wishing you all the best with your trading journey.